The record-smashing 2021 saw the venture capital ecosystem of Saudi Arabia increase by an incredible 270% year on year, with the startups attracting over 550 million in venture capital. And today the Middle East is giving birth to businesses that are serving global customers. So people like Kitopi have raised an incredible $800 million, and today its investors and its founders are worth billions. Even large creators like Nas Daily have chosen to situate themselves in Dubai, in the Middle East. Why have they done that? But why is so much money being pumped into the Middle East and North Africa? Why is this region so hot? And is it likely that we're going to see more juggernauts appear like the Kareems of the world or the Souk.coms of the world? Or is this just all a crazy mirage in a desert that's just going to disappear in an instant? Let's unpack all of this for you today in this video right now. Let's go. For those of you who don't know, the aim of venture capital is to try and venture some money and find the next Amazon or Google or Microsoft to invest in and ride that wave. Really simply, what's happening is we, the investor, are buying a stake in the company. We get shares back from the company. And so as the company does well, as the profits increase, we will get some returns from that company, either in the form of dividends, which are regular payments out from the profits, or when the company sells or it lists on the stock exchange, we will get a massive capital gain if all things go well. But startup investing is a high risk, high reward business. For every Amazon, Apple, or Airbnb, you have dozens of other startups that failed or didn't make it as big as those guys. On average then, about 7 out of 10 startups fail. With great risk comes great reward. And it's a kind of reward that will make up for all the losses that you have in your portfolio as well. It's the kind of returns that would make MBS perk up and look around and be interested. To give you a sense of the kind of numbers we're talking about, think of it this way. Amazon listed in 1997 for $18. Let's say you invested $10,000 at that point. Today, you would have about $16 million to your name. Now, the venture capital investors got in a few years earlier even than the stock list price. So they will probably get about a 10x at least on top of that. So they would be sat on $160 million for $10,000. MBS, are you paying attention? Where venture capital investors have really happy hunting is when they jump onto the back of massive macro trends that they can ride on. For example, you have Silicon Valley and the advent of the internet in the early noughties and the late 1990s. The Silicon Valley ecosystem was its epicenter, and out of that emerged so much value creation that still echoes to this day. Then you have India and China with its young, incredibly large and relatively well-educated populations with a decent amount of money sloshing around in that ecosystem as well. Or another big trend could be literally any country or region where you have an emerging middle class, because that's the thing that you can really ride upon for the next 10, 20, 30, 40 years. Our view is that the MENA region is one of the most important regions for venture capital investors to focus in on over the next few decades. First, the stats are pretty clear. We're not saying this on our own. VCs have been increasing their investment into MENA 138% year on year. Over the years, we've seen some incredible unicorns come out of the Middle East. A unicorn is a company that has a valuation over the magic $1 billion mark. So for example, Careem got bought out by Uber for $3.1 billion. And then we have the Egyptian startup Fawry, which processes over 3 million payments a day and is today valued over $1.4 billion. Another one in the fintech and payment space is STC Pay, where Western Union paid $200 million to take a 15% stake in the company, again making it a unicorn. So as you can see, business is booming across the Middle East, from Egypt, the United Arab Emirates to Saudi Arabia. You might be wondering though, why is all this happening? Right folks, we're going to be spilling the beans on the Middle East in just a second, but before that, make sure that you have subscribed to this channel and liked this video so you can follow along for more videos like this. It really helps us. Much of the Middle East has been blessed with oil and gas reserves aplenty, and that has led to a massive boom over the last 40, 50, 60 years. However, all of these countries are now aware that these wells are ultimately going to run dry. And so countries like Saudi Arabia and Egypt have come up with their Vision 2030, and Abu Dhabi has come up with his Economic Vision 2030. Every single country, even Qatar, has a FIFA World Cup, which it's using to develop a lot of infrastructure. Each of these countries are really focused on making their economies post-oil ready. And that means that there's a ton of money that's being focused and spent on technology and infrastructure, venture capital, all of the key components of what will make each of these economies successful for the long run. All of this means that there is a really strong swell of cash that is ready and accessible for startups that are setting up in the region. One of the key necessary ingredients for any successful ecosystem. A key advantage of the Middle East is that it has a tech-savvy and young population, with over 40% of the population under the age of 25. 94% of the Middle East has a smartphone, with over 88% of people online every single day. And yet, only 8% of the SMEs, the businesses in the region, have an online presence. This means that there is still a huge amount of opportunity, particularly for the businesses to come online, and that's going to be a fertile ground for an incredible amount of economic activity to take place over the next 2 decades. The other key thing is that labor in the Middle East is high quality and relatively cheap, and the place as a whole is very attractive to live in, and people are generally, from a vibe perspective, a lot more optimistic, and that's actually really important for economic progress. Contrast that to Europe, where everyone right now is very pessimistic, and the aging population is going to only increase over time, and generally speaking, it's a lot more expensive to run a business there as well. Alright guys, hang on. Before you start selling all of your possessions and moving to the Middle East, let me just give you some of the risks as well. One of the bear cases with the Middle East, and particularly in the venture capital ecosystem, is that there isn't necessarily as much awareness, education, and experience in the ecosystem as there is in more established centers like the Silicon Valley scene or in London. So the question arises then, does the ecosystem have the critical mass of successes and experience and tech talent that it needs in order to get that flywheel effect turning and get that snowball rolling down the sand dune? Access is also a very serious issue. So for you and I who are interested in investing in the Middle East, it's very difficult to actually get hold of the right startups, talk to them, give them money, take their equity at the right time. It's difficult. The best startups will typically only seek out the best venture capital fund managers on the scene, on the ground, to be able to give them the money. This means that Middle Eastern VC, and actually generally VC as well, is pretty difficult for ordinary investors like you and I to be able to get into. However, there are some solutions. There are roughly 4 ways that you can get in on this action. The first of those is by becoming an angel investor. No, this is not to be confused with you dressing up as the angel of death and scaring young startup founders. What you are actually doing is you are finding these startup founders and you are investing a small amount of your personal cash into them. Again, the challenge does remain though that if you don't work in the tech sector, if you're not hanging out at WeWorks in Abu Dhabi, Dubai or Riyadh or Jeddah, how on earth are you going to come across these guys? And secondly, if you're not actually that wealthy, why would these startup founders care about taking $500 or $1,000 or $2,000 off you when that is not going to sustain them for even 1 month? The second route is by going through an angel syndicate. An angel syndicate is really just a group of angel investors who club together to invest their money as one block. The upside with an angel syndicate is that usually it is led by someone who is an experienced investor, so you can rely on their due diligence. Also, because you're investing as a block, you have much more of a sizable chunk, and that means startup founders take you more seriously and you often can negotiate the better terms. The downside with angel syndicates is that usually this is ideal for when this is a very early stage startup, because that's when startup founders don't necessarily need large amounts of money that would come from a fund. They're happy to take angel checks in as well. The other downside is that angel syndicates typically don't take board seats and have that day-to-day management over that investment either. And so it literally is taking a few punts in good looking startups and hoping they work out without necessarily managing them. The third way is by investing through a VC fund. A VC fund is a fund of pooled assets collected from lots of institutional investors and high net worth individuals that then invest that money across a basket of different startups. The fund manager is given the discretion to choose what he or she thinks are the best startups. There are several advantages to taking this approach. The first is a VC fund manager is usually only able to raise that kind of money, because it's serious money, this stuff that we're talking about, if they have the experience or the track record and the technical expertise to be able to manage a fund. The second thing is the benefit of pooling is you significantly de-risk your investment in venture capital, because you just increase the chances when you pool across a number of different startups of finding a few gems across that range. Finally, one of the key benefits of having a venture fund manager is that their remuneration, their careers, their track records, their reputation is on the line. And so they really do care a lot more about how a particular startup does or doesn't do. And so that means that your investment is properly looked after as well. However, there is still a problem. These funds are usually a bit more long-term, so 5 to 10 years. That really does apply to all of the investment categories talked about. But then also, a VC fund will typically only accept tickets from investors that are going to put in $500,000, $1 million, or $5 million. And that means that it's inaccessible for many, many people. The fourth and final option is to go through feeder platforms that allow you access to institutional VC funds, but at much smaller tickets. A Sharia compliant version that we have is called Curate Capital, where we invest in institutional VC funds that we have vetted and handpicked and negotiated access to, and then we open it up to the average affluent investor who can invest from tickets of 5K upwards. This approach gives you all of the benefits of investing in a VC fund without necessarily having to stump up your entire life savings to get that access. The type of funds that we invest in are literally getting investors from the creme de la creme across the Middle East. So they have investors from sovereign wealth funds and the royalty and the elite family offices of the region. So Zakaria from Manchester or Sam from Bradford is literally co-investing with royalty. Mad. And we're not talking about Kashmir Crown Bakery either, although that is good. If you found this video useful, you'll love this one, where we dig into a lot more about venture capital. Or if you want to find out more about alternative investments generally, like venture capital and others, then this is the one that you should be watching. And you're forgetting something, folks. You haven't subscribed or liked this video. Make sure you do that, or I'm going to grass you up to your moms and dads. Until next time, salam.